Singapore has maintained its GDP growth forecast for 2023, even as a global slowdown looms large. Authorities are expecting growth to come in at around the midpoint of the 0.5 to 2.5% range. The decision comes as the economy grew at 0.4% on year in the first quarter, slowing from the 2.1% growth seen in the previous three-month period. As still, the Trade and Industry Ministry doesn't expect a technical recession this year. Heidi Ng tells us more.
Contractions in manufacturing and several sectors have weighed on growth in the first quarter. That's amid weakness in the global economy and the electronics down cycle. Still, authorities say a technical recession, which is defined as two consecutive quarter-on-quarter contractions, is unlikely.
In the first half, we do expect a fairly flattish or very low sort of Q-on-Q growth, and we expect the growth to pick up gradually in the second half. But obviously, given the downside risks and the weakening outlook, we cannot rule out the possibility that there could be some quarters of negative Q-on-Q growth this year. But again, that's not our baseline.
Besides, Singapore is confident that a rebound in travel that's boosting the services sector will help the economy. Economists point out that major central banks around the globe have signaled that they're at the end of the tightening cycle as well.
This gives a window of relief, I think, to most businesses and borrowers who are grappling with the high interest rate environment. If they're quite confident that inflation has peaked and is going to stabilize and gradually ease over time.
However, authorities warn that risks remain. These include recent banking sector stresses and escalations in the Russia-Ukraine war. China's uneven recovery has been cited by economists as a factor as well.
China's growth outlook is not as rosy as what most people had anticipated early on. And also, there is another factor, and that is the global electronic cycle. It has bottomed, but now the thing is that if China's own domestic consumption, the demand is going to be weaker, then the demand for electronics may not be as strong too.
For now, the Monetary Authority of Singapore says its current monetary policy stance is appropriate and will continue to watch developments on both growth and inflation fronts closely.